AJC.
Can you
How
guys
we
hear
doing,
me?
man?
Good, man. You?
Thriving over here.
It's Monday, brother. It's Monday, and we're caffeinated up,
Oh,
and the
same.
market is up, and the people are getting tokens. And I mean, feel like there's a gazillion things for us to dive into here. You're enterprise research manager at Messari. I think Messari's been you and your crew. You got I want to call you the Bros. I'm sure you have other people there, but the
A
Bros.
lot of people call us the Messari Mafia. That's kind of.
I will not be one of those people. That's
That's
not.
all right.
That's
That's
not.
all
I'm going to
right.
call you Messari Bros because I'm not a fan of alliteration on a Monday. Um, but yeah, I think have been very well positioned, or at least have some really interesting calls in the last little while. I think very well ahead of the privacy meta, and I think have been a good sounding board on the timeline as we've kind of gone through the chop and ups and downs over the last little while. But I want to maybe focus our conversation to start with here a little bit on creator coins, obviously very relevant for us as we have one here, and then maybe turn our attention a little bit more to what your interests are moving into 2026. So my first question here is, should I launch a token from my dog?
Yes. The answer to that is always yes. Yeah, we could start with kind of my dog thesis,
Let's do it.
creator pet coin thesis. It's kind of died down, but like I still believe in it. I'm just trying to like how I think about it is what is going to make Zora go mainstream and like kind of break out of just the crypto fold. And I think like broadly animal coins, pet coins is probably one of the best ways to actually do that. Everyone loves dogs. I had the tweet up a couple weeks ago, just like going through stats, but like pet influencers are like actually so much better than like regular influencers when it comes to like selling product and whatnot. People just implicitly trust dogs and animals when they're selling them a product versus humans. And we see the same phenomenon with crypto, like dog coins. I don't have the number off the top of my head, but dog coins, animal
Yeah.
coins, like a $40 billion market cap. Like it's literally one of the biggest sectors in crypto. So if you're trying to get people to sign up for this new social media app, like a lot of people themselves aren't creators, and they don't want to necessarily be creators, but I think a lot of people wouldn't mind being a pet influencer or having their animal be a creator.
Well, having a market cap for myself versus one for my dog feels like a meaningful distinction.
Yeah, exactly. And
I
then
mean,
like,
go for it.
no, you keep going.
Well, I'm just curious what your more meta thesis on Zora is. You're putting attention here. What's sort of the bull case in your mind?
Yeah, the bull case in my mind is that Zora is building a brand new social media experience. And how I think about it is like the world of social media is only expanding. We add new social media apps to like our daily repertoire every couple of years. And I think Zora probably has like the best chance of offering like a net new experience to like having financialization cooked uh, in every single experience. I think is super important. What a lot of people don't realize is like there is already a price on every single account, every single post on social media, and Zora is just simply bringing that price, making it publicly known to everyone. And I think that's like a meaningful improvement. And like through that, now we have a public price. Now we can create markets, and now we can create a lot more cool user experiences, like creator consumer experiences. And I think that's going to be a compelling case for Zora. But yeah, like the to sum it up in like one word, it's a new financialized form of social media.
Yeah, totally. I think it's like the thing that I show my normal friends or dentists or hairdresser or whatever, where they're like, what kind of stuff is being built that's interesting in crypto? And you show them that and it's like, oh, it's Instagram, but everything is a market. They're like, oh
Yeah.
shit, that's weird. So what,
Yeah.
I guess like, do you think 2026 is the year that Zora really breaks out?
Yes, I do think that. I think it has a lot of things going for it. Like I think, but just more broadly, it's actually like a really slick app to use. Like it doesn't really feel like a janky crypto app. Like if you compare it back to like Friendtech back in the day, it's night and day.
But this is
So-
just Friendtech repackaged, man. It's nothing new. It's just like...
See, the thing is, that's good. Friendtech had good ideas. I don't think anyone like is going to disagree with that. Like all of crypto Twitter signed up for Friendtech. Everyone was using it. Like I don't think we should just like throw away the ideas that Friendtech had because it ended up failing. Like that's kind of the lesson in crypto is that like the current successes we're seeing are really old ideas. Like take Polymarket, for example. Like they were not the first prediction market. Like prediction markets in crypto go back to like 2015, 2016 or whatever with Augur. Take Hyperliquid and perp dexes. Like GMX came out end of 2021, early 2022. So I think it's like silly to just like oh, this has been tried and failed before, let's not do it. I think that's kind of the exact opposite of what is happening in crypto, is that we've taken many shots on goal and failed many times. But the fact that people are still willing to take shots on goal and try something shows that there is actually something there. So I think it's a good thing that Zora like added DMs, and like you can like pay basically to get in contact with like your favorite creators and whatnot, like, and copying the friend tech model. I think that's good. But yeah, like so for some background, like what I'm working on right now for crypto is the crypto theses for 2026. So Messari puts out like a huge year-end report. The whole enterprise team is working on it. Just to, like, as the manager, I kind of focusing my full attention on it, and like we're gonna have a big consumer section. Like one of our big theses for 2026 is like a financialized social media, probably Zora, maybe Pump Fun as well. Like really breaks out hard in 2026.
I'm curious how you think about like the token model underneath Zora. Like, to me, there's sort of these two really interesting. I mean, there are probably more, but these two really interesting experiments that are going on right now. And one is sort of looking at tokens as more equity-like instruments, and I would argue that's what Pump.Fun is doing, right? There's this a focus on generating a ton of revenue, using that revenue to buy and burn the token. So holding this token is a way to get exposure to the economic activity there. And I think Zora is taking a very different approach. They're saying actually the Zora token is more money-like, and this money is used to create markets, and this nested markets that Zora have, from the network to the creator coin to the content, is and that sort of the tie-in between all those levels is the thing that ultimately drives value to the underlying token. Is that the right way to look at it? And do you sort of have thoughts on the validity of either?
Yeah. I mean, I think for the perspective of Pump Fun, their more equity like model works for them. But personally, I would not be interested in Zora if they adopted an equity like model. The key to me really is this money aspect. At the end of the day, social media is just a network, and you can align participation and align incentives amongst everyone within said network through a money model. Um, so I think like the whole money model for Zora is like really key. For example, like if I was streaming on Pump Fun, let's say I have my creator coin over there, like I don't necessarily want other people to come onto Pump Fun and start streaming there. Like they're gonna just divert attention and capital away from me because there's no incentive between us, right? Take that, compare that to Zora. Everything is paired with the Zora token. So I actually want as many people to come and be a creator on Zora because that increases the price of Zora. I'm paired against Zora. That increases the price of my creator coin. All my content is paired against my creator coin. So like it's a much better flywheel. And obviously, like it's a flywheel and it can work in the reverse. But this is just how money works. You could make the same argument for any type of monetary based asset. And like I think another trend that I think we see in 2026 is like we kind of go away with this notion that like only L1 tokens can be money. And actually, what matters if you're building a network, right? It doesn't necessarily matter if it needs to be a layer one network or a social media network. But if you're building something that's network based, we can now, because the text has gotten really good, Zora's a great app. You can kind of abstract the whole money experience away. People don't even need to know they're using the Zora token. And I think we're going to see like the emergence of like micro monies in 2026, and I think Zora is like a really great example of that.
Micro monies.
I mean, do you think Pump should adopt the quote pair model? And I'm curious.
I do think so.
What,
I do think so.
yeah.
I think they need to like kind of rework it a little bit first, like not just go straight for it. But I do think they need to end up with a model where Pump Fun, if their end goal is to, again, if their end goal, because in their like announcement tweet about the Pump token, they're taking on Facebook. If they're going to build some social media competitor, they do need to go that route. If they're just going to kind of remain like a launch pad, then I don't think the monetary model makes sense for them.
I mean, that's actually a request for research I have, is like what would Pump be trading at if all of their markets were denominated in Pump? And I think it would be much higher.
I don't know.
Yeah,
I
I'm with
think
you.
so. I think I tend to agree, but again, it really depends like what you're trying to build. If you're trying to build some like Facebook like competitor that's going to become a massive social media, I think you need to have that money aspect to make it work. But if they just want to go the route like we're just a business of launching tokens and there's not really going to be much network effects between our tokens that are launched on our platform, then I would say the money model probably doesn't work for them.
Yeah, I feel like there's still a discount being applied to this quote pair model because people don't fully grok it. Like
Yeah.
it's a thing that's just wild. I mean, we're actually really starting to see it come up in a lot of the startups that we're talking to right now. And I think that the discussion is really around what type of assets or platform, or I think network is the right word to use here, makes sense for this. But I think if you sort of ask the question, it looks like Pump is really trying to take a step into, token issuance generally. ICM's a move that they've been putting a lot of attention into recently. And so the question in my mind there is like, do you want your startup token to be paired with a Pump token? I think we're going to see a bunch of teams kind of run at that. I think Noise just announced something yesterday, I think, or over the weekend, where they're kind of running at this internet capital markets idea where the Noise coin will be the underlying coin for markets that are created there. And feels like it can be limiting in a certain way. And so it really brings up the question in my mind around like what are the aspects that actually make this type of model work versus places where it doesn't. And to me, there's sort of a sense of almost limit or at least, you're definitely not going to have something like a Monad or a Mega ETH which are obviously trying to be their own networks as well. So these sort of bigger market opportunities launch in this way. But I'm probably open to there being a new type of asset or organization. Like, would Shopify with a crypto version of Shopify with a paired token work or be interesting? And maybe it feels like there needs to be some sort of bounds around it to define a new type of asset.
Yeah, I think it makes less sense for like ICM. If you're going to build a business, you really don't want your your market cap tethered to some other person's business. Like, it doesn't make any sense. But I do think meme coins and Pump are much more of a social media platform, at least today, than they are a business launch pad. Maybe they eventually go there, but I think in the social media context, it makes a lot of sense.
Yeah, you really have to think about it. Like, what are the trade-offs of going with a monetary model? It's one, first off, you're going to get worse execution on trades. So if you're building a more financialized product where your core user base is going to really care about those extra basis points, maybe that's a bad idea. I don't think social media traders do care about that at all. So to your point, meme coins and whatnot. And then the other thing is just increased volatility. So if you're trying to build a multi-million-dollar business, yeah, that might be a bad thing. But if you're just launching a 50K creator coin, they're already volatile. It doesn't matter what you pair it with.
And there's a lot of, one of the big dynamics that emerged from Facebook is that there's all these types of businesses that could not exist before Facebook and Facebook advertising that have launched there. And so I think it's fair to think that there would be new types of businesses, using that term pretty broadly, that would launch on these platforms or in a quote pair model. I'm curious if this model changes how you look at maybe some of the more recent news here with Mega ETH and Monad raising big money and being launched at multi-billion-dollar valuations. One of the core ideas I think that Jacob's pulling at when he talks about a quote pair model is that the premium for these L1 assets are probably going to go away if more things can be money. I wonder if you have thoughts on that.
Yeah, no, I totally directionally agree. And another one of our big theses is going to be apps over chains. If you actually look at revenue produced by the top blockchains versus every other asset, past cycles, chains dominated, and then I think in early 2024, mid 2024, it actually flipped. So apps make more revenue now than chains, and it stayed that way. And the lead's only growing. But yet, interestingly enough, all the increases in market cap that we've had has been going to chains and not said apps. So if you look at their price to sales ratios, apps have stayed pretty stagnant while chains have only actually been expanding.
Money.
So
why is that? Is that just the lingering fat protocol thesis? Or?
Yes, so one of our theses is going to be we kind of see a reversal of that, and we're going to actually see money start flowing to apps because I think part of there's kind of two reasons. One is just the fat protocol thesis that these platforms are money, but I think we're going to see that kind of break down. For example, sorry, I lost my train of thought, but yeah, we're basically going to see that break down, and then the other aspect of that is just more so the blockchains at the end of the day get all the revenue, but we're seeing objectively that's not true anymore. So with that, I think over time you're just going to generally see more capital allocators allocate to the apps over the blockchains themselves, the L1s, the L2s. With that said, I wouldn't like say like Monad and Mega ETH are like raising at absurd valuations. Like I think they're pretty reasonable.
I mean,
But
it's a
like
wild comment. I mean, really, like reasonable relative to others. I agree. We were talking about this at the beginning of the show. It is crazy, you know. 2, 3, you can sort of will multi-billion-dollars out of the air with nothing live and no real understanding of the true demand for these things. But I don't think I fundamentally disagree with you. I think that what's interesting is we're talking about revenue to apps, and then we're talking about money like versus equity like or revenue based opportunities. And so I think what maybe drives that shift to increased value for the apps is just a better token model. I don't know where your head is at with the sort of value of buy and burns here. Is this something that's going to continue and grow, or is this sort of a meta that'll kind of already had its day?
I think it'll continue, but I do want to caution a lot of teams like exploring this model. It works for teams like Hyperliquid, teams like Pump Fund because they've already established pretty significant moats and they have enough cash or whatever to invest in any growth opportunity. So like if you're still in a growing phase, absolutely whatsoever, do not pursue buybacks and burns. I think it's a pretty poor use of capital. Obviously, the counterpoint is like we need to signal somehow that our token isn't just valueless or whatever. But I would say there's other ways around that. We can just improve like token equity relationships, have it that token owns the equity and not the other way around. So yeah, I do think we probably continue going more towards that model just because like teams want to signal that hey, we're not trying to rug you, like we care about our token. But I do want to caution, like I don't think you should just like if you have some revenue, like oh let's go buy back and burn our token. Like I think the market is kind of unfairly punishing some teams that pursue to reinvest growth right now, which is signs of like an immature market. So smarter capital allocators will say, hey, this is a good opportunity to invest in said token at discounted prices. So I think we continue seeing that, but I do want to caution like teams just like blindly going that direction. I think it makes sense for Hyperliquid and Pump Fund. I don't
Yeah.
know who else should be pursuing it.
I mean, let's get into the privacy coin meta. So I guess curious, just kind of your broad perspective on why this is happening now. I guess why Zcash? I've seen your kind of rail thesis or
Mhm.
pushing rail quite a bit. So curious how that compares, and yeah, just kind of overall thoughts on it.
Yeah, totally. So I'll just start like privacy more broadly. I think privacy is fundamentally important, and if you don't believe that, then nothing else I'm going to say matters. So if we all agree that like privacy is fundamentally important, not just for crypto, but just like in life in general, and like humans have the right to privacy. If that's true, we should have the right to privacy on chain and whatnot. In the past, if so, we if we agree on that, or you agree on that thesis, right? Um, why did it only take till now? Like, well, the reason is privacy has been extremely risky in the past. If you built privacy projects, if you invested in privacy projects, you had the risk of going to jail. The Tornado Cash devs got arrested. We just saw the Samurai devs agree to a plea deal or whatever. So it was very risky to touch upon this. But since Trump got elected, we've seen some changing in the political and regulatory wins in regards to privacy. OFAC rescinded their sanctions on Tornado Cash. So it seems to be de-risked. And now that it's de-risked, basically capital allocators in the space had no exposure to privacy and whatnot. And they need to reposition because privacy at the end of the day is important. We need exposure to said privacy assets. So I think that's kind of why you saw privacy more broadly re-rate, and I think it's going to continue re-rate. For a sector that basically has had no serious capital in it, people are just not going to get correctly positioned in the matter of a couple months. Like this is going to be uh, a trend that probably goes on over the next couple months, maybe even years, depending on like how much capital is interested in this. The more broadly, Zcash, like I think another important catalyst for now is Bitcoin is having a bit of a civil war between the Knots people and the Bitcoin core people, and a lot of people are kind of starting to price in maybe this reality that Bitcoin is actually unable to change. We'll actually never get Bitcoin L2s that can enable privacy, and if I can't have private Bitcoin, is it really that great of a store of value? So I think that's also part of it is people are pricing in like, what if Bitcoin is unable to adapt? What if Bitcoin is unable to add some features that are fundamentally important for a store of value asset? So I think that's part of the bid for Zcash, but I do think more broadly, privacy just needs to re-rate. It's de-risked now as a sector. People can build in it. People can allocate to it. So yeah, that's kind of where my railgun thesis plays in as well.
Yeah, I mean, rail. If you look at the rail chart, it's just this like, oh hey, right, this thing exists. It goes from a $1.26 to 300% in sort of a period spate of a couple days here, which is kind of crazy. And yeah, I guess that does make a ton of sense. It's weird how and when the market wakes up to this stuff.
I mean, I think Naval maybe was tweeting about Zcash. I think Merck jumped on it. You kind of just need this. I think the regulatory landscape clearing up. It's you have these tailwinds, and then you just kind of need a spark from someone that has a bunch of attention, and then reflexivity does its thing.
Exactly. Yeah, like Railgun is another great example. Like this all happened, and then like the Ethereum Foundation announced like, oh, we're building a new wallet SDK that's going to natively implement privacy protocols like Railgun, and the market at first just didn't care. And then I tweeted about a couple other people like, wait a second, like this is massive. Like this is like the key for any like DeFi project is like distribution. And now Railgun is going to have this massive like distribution boost. Like this matters to price.
Mm-hmm.
And then it's just kind of funny. Like you literally just see it on the charts like, oh shit, this stuff matters again. Boom. Vertical line up.
New range unlocked.
I saw that Zcash flipped Ethereum and private TVL. Like, do you see that persisting, or do you think the big winners are ultimately going to be like privacy protocols on Solana base, these kind of dominant networks?
It's a good question. I would lean towards no, I don't see this being persistent. But again, like I think it truly depends on how much each chain's team or foundation or community really cares about this. If you have been following my tweets for a while, I've been a little bit of an Ethereum hater in the past, but I do want to give props to like the Ethereum Foundation for like pushing this to the forefront. I do think privacy is important, and I'm really happy to see like them kind of leading the charge for Ethereum. I would like to see more of the Ethereum community like care about this as well. Sometimes it feels a little lonely just talking about like stuff like Railgun or like privacy pools or like Tornado Cash on Twitter and whatnot. But at the end of the day, I don't know if like Twitter matters that much when it comes to stuff like Ethereum. But yeah, I just think the TAM is much larger if you're not forcing people into a specific form of private money. So like if you care to switch to Zcash, you have to care about privacy so much that you're actually like willing to change your monetary preferences, which is probably a jump too large for many, versus something like a Railgun on Ethereum. It's like, hey, keep your money, choose whatever money you want, whether you denominate your wealth in stable coins, ETH, Bitcoin, or whatever. You can just deposit into this and we give you privacy. So I think the TAM for that is much larger. So I would not bet on Zcash maintaining like this private TVL lead over private assets on like smart contracts. But I do think there is room for both. I think the TAM is much larger.
The power of being like the private Bitcoin, which I think is one way that people are talking about Zcash, is more mimetic than it is fundamental in many ways. And maybe my bull case for Zcash is that it just continues to kind of get that bid for being seen by, in the same way that XRP is seen as a banking competitor or whatever, regardless of what the reality is there. There's still a ton of energy and value around it, which, yeah.
And I think like for the purpose of like trying to evaluate these assets, like it's much more bullish Zcash to become money than like Railgun to become the privacy layer. It's just like you're assigning probabilities to these things. Like I think the probability that Zcash ascends to the status of Bitcoin money is still very low. But I think the probability of Railgun like becoming the privacy layer of Ethereum is significantly higher than that. So like in the best case scenario, like Zcash is worth infinitely more than Railgun, but like you have to assign probabilities to that. Like the bull case for Zcash is unironically Bitcoin failing. And right. I'm not sure I'm comfortable in that position.
Yeah, not a bet I'd make. All right, so give us another look into some of the other theses that you're working on towards 2026.
Yeah, so we have a couple. So we have like 7 high level ones, and then like from those theses, there's like sub theses and like mini theses. But like the first one is just kind of about like crypto money. We've talked a lot about this in this call, but just this idea of like what is the original point of crypto? It's great that all these institutions are getting involved. But like, don't lose sight that fundamentally we're building new forms of money, and that's kind of most important. Everything is like secondary to that. Another thesis is kind of like the parallel to that is like the convergence of TradFi and crypto, and like how TradFi and these institutions are coming on chain and offering new products and whatnot. Another big thesis we have is decentralized finance is just becoming internet finance. Basically, I think we're going to see all new forms of finance happening on chain, whether it's just your traditional DeFi stuff like lending and perp dexes versus newer and interesting stuff like DeSci and like finding funding for these interesting science research labs that can't get funding, and they're not going to actually go to crypto to get that funding. ICMs also fall under this umbrella, but basically DeFi is expanding just to be more than like borrow and lending swaps and stuff like that. And return of Coinbase is now bringing back ICOs and whatnot. So like that kind of falls under that. Another big thesis is like just kind of the multi-chain world. Blockchains are becoming increasingly competitive. Whether like that's Solana eating into Ethereum's market share, whether that's L2s trying to eat into other L2s market share, or kind of these new like next gen chains we see coming live, but just like kind of giving a lay of the land there.
Is the thesis there continued fragmentation, or
yes, yeah. The thesis there is like continued fragmentation, and it's going to be hard for newer chains to like establish these moats. And I think at the end of the day, it's they just kind of all eat into each other. And on top of that is like the new chains that probably win or like have that have built-in distribution. So I'm very curious to see how stuff like Robinhood Chain and Tempo end up doing. I'm not like price wise, but I'm bullish on them gaining market share. I think that's going to be like a key differentiator for any like new chain coming to market. It's not going to just be your tech that matters anymore, but it's like, can you bring new users on chain? And if the answer to that is yes, you have a good chance of success. So that's kind of the big thesis there. Some other sections is like, and we kind of touched on this earlier, is like consumer is going to be like the breakout sector for crypto in 2026. Stuff like Zora is going to do really well, we think. But yeah, just like
any kind of emerging categories there that aren't prediction markets or ICM launchpads or social trading products.
I mean, that's like kind of the forefront of the thesis. We're still kind of early in the whole process, so I'm sure there's some. Off the top of my head, I think like the focus is going to be kind of on Zora, on the social trading apps. Like I think FOMO is a great experience, and like probably is something that people not typically using crypto would enjoy. But yeah, like that's kind of the broader thesis there. But again, once we start writing it and crunching numbers and stuff, like it obviously changes a lot. So there could be interesting stuff there. I would like to also touch upon like the return of NFTs possibly. I don't think it happens in 2026, but I do think NFTs are like a direct bet on the cultural influence of crypto. And
hey, we had Raul on Friday, and he says that as AI comes, crypto art is where you want to be played. It's the hedge. Crypto art is the hedge going into 2030.
Yeah, I can give you my crazy theses on like Botto and like ZXBT, but basically like AI, the problem with AI art is like it's infinite. Like
there's not AI art.
I know. I get what he's saying. I'm just saying like there's a lot of ways to like how AI is going to change the art industry, but like the interesting use case for like crypto and AI is like if AI art is infinite, you need to introduce scarcity, and you do that through tokenization. So like if the supply of AI art is literally infinite, it's going to infinity. The first AI artists that are able to like introduce scarcity to their art are like are going to become extremely valuable. So like Botto, ZXBT like might be the AI Leonardo da Vinci's and Michelangelo's.
On my bags. Let's go.
On my bags. So that's the crazy thesis there. Maybe we'll touch upon that in the crypto thesis as well. But yeah, I think getting back to my original point, like NFTs are just like the market cap of like the cultural significance of crypto. And if Bitcoin is going to go to $1 million or whatever, and like increasing portion of the world's capital is going to be allocated to crypto, I find it hard to not also think like crypto's cultural significance is not going to also increase. So maybe this doesn't happen in 2026, but I do think long term there are going to be some interesting NFTs.
All right, brother, we got to leave it there. Thanks for rambling with us.
Of course.
Good follow on X. I think, do we have you up here? We got your handle in the bar below there.
Good follow on Zora too.
Yes.
Yes. I mean,
follow me on Zora, follow me on X. Yeah.
and look forward to Messari Crypto's. I guess that's a Christmas gift that comes out closer to the end of the year, right?
Yep. Yeah, that's a great way to
Nice.
think about
Have
it.
you guys looked back on how correct you have been in previous ones? Is there that's what should come out on the top? We are batting 300 or 200 or
You know, we haven't, but now that you bring it up, we'll look into it.
I mean, you should just embed some prediction markets in there and let everyone
oh shit
get some skin in the game.
Let's go.
I like that idea.
Let's go. All right, brother. Thanks for hanging out with us today. We'll
Thank
see you
you.
on the timeline.
Thanks
Peace,
for having
man.
me on. I appreciate it.
Cheers.
Take care, guys.